Welcome to 2026, where investing has been transformed. The revolution isn't about chasing hot stocks, it's about access. For decades, prime assets like commercial real estate and high-yield bonds were reserved for the ultra-wealthy. Now, those barriers are falling. Tokenization and next-generation ETFs are opening doors for everyone. These tools fundamentally change how ownership is recorded and traded. Imagine owning a slice of Manhattan real estate or US Treasury bills instantly, affordably. Blockchain technology is making markets more efficient, transparent, and accessible. Everyday investors can now build diversified portfolios with just a few $100s. The power is shifting from old gatekeepers to individuals. This is democratized finance, new choices, lower costs, and greater control. We'll explore what tokenization means, real-world examples, and how to build your own modern portfolio. We'll also cover the rise of crypto ETFs and hybrid funds that blend traditional and digital assets. Most importantly, you'll get a step-by-step guide to start investing in this new era. The future of investing is here, and it's more inclusive than ever. What is tokenization? Simply put, it's turning real-world assets into digital tokens on a blockchain. Anything can be tokenized: real estate, gold, private company shares, or government bonds. The magic is fractional ownership. You can buy a tiny piece of a multi-million-dollar asset. Before, investing in commercial property meant buying the whole building or joining exclusive funds. Now, you can own a fraction for a fraction of the cost. This opens up new asset classes and true diversification. Your portfolio isn't limited to stocks and bonds anymore. Add real estate, private credit, and more, easily. Tokenized assets are also liquid. Trade them 24/7 on digital exchanges. No more waiting months to sell or paying high fees to intermediaries. Blockchain ensures every transaction is transparent and secure. Smart contracts automate deals, cutting out middlemen and reducing costs. Settlement is nearly instant, and ownership is always clear. The result? Investing is cheaper, faster, and more secure. Tokenization is breaking down barriers and making the world's most valuable assets accessible to all. The investment landscape is being redefined. Tokenization isn't just theory, it's happening now. BlackRock's Buell Fund is a tokenized money market fund, investing in US Treasuries and repurchase agreements. Hold the Buell token and you own a share of this secure, yield-generating portfolio. Franklin Templeton's on-chain US government money fund, FOBXX, operates on a public blockchain, offering near-instant settlement. These products show how blockchain improves even the most traditional investments. Real estate is also being revolutionized. Platforms like Realty let you buy fractional tokenized ownership in US rental properties. Earn rental income directly in your digital wallet, starting with as little as $50. Realty turns complex real estate investing into a simple global opportunity. Centrifuge focuses on private credit, letting investors access pools of tokenized assets like invoices and mortgages. Once reserved for banks and hedge funds, private credit is now open to more investors. These examples, from BlackRock to Realty, prove the tokenization revolution is real and growing. New ways to build wealth are emerging every day. The future of investing is already here. While tokenization changes real-world assets, digital assets are going mainstream too. The launch of spot Bitcoin ETFs in 2024 was a turning point. Now, anyone can invest in Bitcoin through a regular brokerage account. Billions have flowed into these ETFs, managed by giants like BlackRock and Fidelity. The ETF structure made crypto accessible, regulated, and secure. Ethereum ETFs followed, opening up another core digital asset to mainstream investors. Ethereum powers many tokenization projects, making its ETF especially significant. Europe has led with crypto-backed products for years, and the US is catching up fast. The global race is on to offer regulated, low-cost digital asset exposure. Crypto ETFs are now a core building block for modern portfolios. Digital assets are no longer niche, they're essential. The next step is hybrid ETFs, combining traditional assets with tokenized and crypto holdings. Imagine a single ETF with global stocks, bonds, tokenized real estate, and a slice of Bitcoin and Ethereum. It's a supercharged balanced fund, all in one ticker. Hybrid ETFs simplify investing. No need for multiple accounts or platforms. They offer built-in diversification, including alternatives like private credit and real estate. Professional managers handle the complexities and rebalance automatically. These products are emerging now as technology and regulation catch up. The demand is clear, and more hybrid ETFs are on the way. This is the fusion of traditional and decentralized finance. The result? A simple, powerful, diversified investment vehicle for the next generation. The future of portfolio construction is here. How can you build a modern portfolio? It's easier than ever. Start with 2 accounts, a standard brokerage and a crypto-friendly platform or wallet. Many apps now offer both traditional and digital assets in one place. Step 1. Allocate about 70% to traditional ETFs. Think global, stocks, and bonds. For example, 40% in a total world stock ETF, 30% in a total bond ETF. Step 2. Add 10% to crypto ETFs, split between Bitcoin and Ethereum. This gives you secure, regulated exposure to digital assets. Step 3. Use your digital asset platform for tokenized real-world assets. Allocate 10% to a tokenized money market fund like Bullweidel or FOBXX. Another 10% can go to fractional real estate via platforms like RealT. This mix adds diversification and new income streams. All of this can be managed from your laptop or phone. Start small, use familiar platforms, and build as you learn. The tools for sophisticated investing are now accessible to everyone. The modern portfolio is at your fingertips. The benefits of this new ecosystem are clear: lower costs, speed, and democratized access. Tokenization and next-gen ETFs cut out costly intermediaries. Blockchain automates processes, reducing fees and boosting returns. Settlement is nearly instant. No more waiting days or weeks. Your money works faster, and you can react to opportunities in real time. Fractionalization lets anyone invest in assets once reserved for the wealthy. Build a portfolio with real estate, private credit, and more, just like institutions. This level of access was unimaginable a decade ago. The playing field is being leveled for millions. Investing is now more open, efficient, and fair. The future belongs to empowered investors. The opportunities are exciting, but caution is essential. This is still a new frontier. Technology and regulations are evolving. Understand the risks: platform security, market volatility, and changing laws. Use reputable regulated products and platforms. Crypto assets can swing wildly. Keep allocations reasonable. Tokenized assets may not always be as liquid as stocks. Stay informed about regulations in your country. Always consider your financial situation and risk tolerance. When in doubt, consult a qualified advisor. In 2026, we're witnessing a profound shift in investing. Tokenization and ETFs are reshaping ownership, liquidity, and access. The walls separating everyday investors from prime assets are coming down. Financial giants and innovative startups are driving this change together. Crypto ETFs have proven the demand for accessible, regulated new assets. Now anyone can build a diversified, global portfolio, including real estate, private credit, and digital assets. The process is simpler and more integrated than ever. This is true democratization of wealth creation. The future is fractional, digital, and open to all. For those who adapt, the opportunity to build lasting wealth has never been greater. Welcome to the new era of ownership.